Welcome back. Still 50 points higher on the index. 24,600 is where we stand. 200 points higher on the sensex, as Rima was highlighting. Railway stocks, RITES, Railtel, all of them doing well. Ircon is now up 8%, is moving higher and gaining strength as well. RVNL2 at the highest point of the day. RITES is up 6%. Mind you, RITES won an order yesterday. It is up 6%. Ircon has also now surged to the highest point of the day. And pull up Nava, and that is the top gainer on the Nifty 500 today. 12% higher on that stock. Nava Limited, and there you can see that 13% higher now on that stock, the top gainer on the Nifty 500. Also a couple of new listings as well that are doing well today. International Gemological Institute, IGI, 5% higher there as well, and Inventurous Knowledge Solutions, so IKS Health, that too trading with gains of around 5% in today's trading session. So quite a bit of strength seen in specific stocks in the broader markets today, when the Nifty though still continues to struggle to cross the higher end of its trading range. The Ashi Anand of IME Capital is now joining in to discuss some more sectoral ideas and his recommendations as well. Ashi, good morning. Thank you for joining in. You can't not help but ask, because the flavor of the market has been defense and railways in the last month or so. Where are you positioned in both of these names, be it the shipbuilders, be it the railway names, or the traditional erstwhile legacy defense companies at the BELs and the HALs?
Sure, excellent. Firstly, thanks so much for having me on the show. This is definitely a space which is kind of looking interesting, and I think more so in the current kind of market environment, where across kind of other sectors, you are kind of struggling to kind of find growth at the current point in time. So in a market which is really struggling to kind of identify growth across other segments, both defense and railways do hold the kind of promise of increased government spends. Now, while overall government capex spends are kind of plateauing at some level and are kind of growing incrementally in line with GDP and with the budget, I think rail and defense are two areas where the markets still believe that the government can kind of continue to kind of spend disproportionately here. We currently do have defense in our portfolio. Amongst the kind of defense names, our preferences towards Bharat Electronics. Now, the primary reason for that is amongst the various PSU defense companies, it is the most diversified, and it's also the least kind of linked to specific kind of lumpy orders. If you look at a company like HAL, the orders tend to be very long tenured, very lumpy. Bharat Dynamics has seen a lot of kind of margin volatility in the past. We kind of see Bharat Electronics as a relatively safer way to play a theme, which we see to be very attractive over the kind of longer term. When it does come to rail, we have kind of looked at this theme quite closely. And our kind of concern is that you already have a fairly high base in terms of overall spends here. And the ability for spends to kind of grow disproportionately over the next 4 to 5 years to really account for the high valuations that some of these companies are trading at. We kind of prefer defense over rail there, because we just believe that in defense, the multi-year disproportionate growth story is a lot clearer.
Ashi, hi, morning, Rima here. So tell us, almost half the year is done. Which theme has positively surprised you? Which theme has taken you by surprise negatively?
So I think it's not been a particularly positive year, right? As in, you've just had volatility up and down. I think the key theme, which has clearly kind of worsened over the last kind of 3 or 6 months, is specifically kind of IT services. We aren't speaking about digital here. We are speaking about IT services. I think no one really seems to understand what Trump is doing and the impact of various measures that Trump is kind of undertaking on the US economy. In that context, a lot of kind of US companies are holding back on spends, and this is clearly pushing back the growth recovery that we were expecting from IT services. So this is a space that has kind of clearly worsened a bit. Now, apart from that, I think from the start of the year to kind of 6 months down, right, and the 2 quarters kind of down, Q3 and Q4 results have recently just completed. I think by and large, what you are seeing is a lack of growth. You have some of the traditional kind of sectors which were struggling for growth earlier, right? So consumer is something where FMCG has been disappointing in growth for many years. Discretionary kind of consumption also kind of came in with kind of growth weakness over the last second half. And so I think sectors like kind of consumer, where growth was a bit weak, continue to be a bit weak. And I think the main thing we are kind of really trying to focus on is there were certain segments, capital goods, real estate, capital markets. Now, these were companies that were really driving the overall earnings growth of the market. Some of these have had a high base kind of catch up. And as compared to, if you're seeing a lot of real estate companies who are growing at 30 to 50 times on pre-sales, companies like a DLF, a Godrej Properties have now toned down those to kind of high teen kind of growth. It's still fairly attractive, but growth is coming off a bit there. So I think the one main thing we are really focusing on is where do we see growth? And we will very actively be positioning our portfolios towards segments where we are seeing greater signs of the growth recovery.
Okay, just one stock, in your digital portfolio, India Mart. I know it's not a significant holding, 4.5%, as I can see, but India Mart's numbers have been disappointing. They still haven't managed to close the churn, and start getting those quarterly paying subscribers, the metric that everyone tracks. And it's been, I think, close to about 3 years where the stock hasn't given any return. Since you have it in your portfolio and you assess it very closely, what are your thoughts on India Mart?
So just to kind of explain, even from a portfolio positioning perspective, our portfolio is, and we've discussed this in the channel in the past, it's kind of a quasi-private equity, long-term buy and hold form of a strategy. It's kind of weighted, the two core kind of weights that we have. One are the very large weights that we have in the portfolio. These tend to be 10 to up to even 20% weight in certain stocks. These are companies where kind of we're just very, very confident about the multiple kind of levers at play and the longer term growth story. We also do adopt a string of pearls approach where we have relatively kind of smaller weights in companies that are looking attractive either for the longer term growth story, but perhaps the competitive barriers to entry are not as strong as some of the other listed digital platforms, or kind of companies where valuations may be a lot more in favor. And kind of India Mart fits within that. As compared to a lot of your digital plays, which would trade at extremely high PEs, very often because earnings are depressed. India Mart can actually be valued on a traditional price to earnings multiple. If you're just looking at kind of financials are actually not so much of the problem because what you have seen is with growth of new subscribers coming down, you've actually seen very attractive margin expansion as they've actually gone slow on new growth initiatives. However, the key kind of call is what can they do to rejig the silver kind of tier offering in order to make that more attractive to take care of the churn that they've been struggling with. Now, the reason IndiaMart does have a position in the portfolio is that if they do manage to address this, the stock is extremely attractively valued. So in our view, you are kind of discounting a lot of the kind of current concerns and you aren't factoring in for the fact that the management is looking at trying to address the solution. And if they do manage to find a solution to the churn, this is very clearly the most attractive and the leading B2B platform in the Indian digital space.
All right, Ashi, pleasure having you as always. Thank you so much for sparing time and joining us today. Looking forward to having you more often on the show. Well, still the index remains where it is and this broader market moves, of course, pull up Sare Gama, and that is now among the top gainers on the Nifty 500, 6.5% higher on that stock. Coforge is trading its stock split today, and after that, it's trading with gains of around 1.5%, some bit of volatility in the initial bit of the trading session, and since then it has recovered from the lows. Uno Minda is the other one, 4.5% higher there as well. And Swiggy, 4% higher on that stock, of course, still remains below its IPO price, but another good day for Swiggy. They're 4% higher now, nearing the mark of 350. We'll take a short break, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away. That's CNBC-TV18's all-new app, which gets you breaking news, in-depth articles, and financial world updates, all of them at your fingertips. You can download the app from the Apple Store or the Google Play Store, or you can even scan the QR code that comes up on your screen and you can get that app on your phones. Take a short break, back on the other side.